Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday, the 28th of January, 2021. And we're commenting on what the FOMC and Fed Chair Jerome Powell reported yesterday. But we've left today's video a little late because of the quite reasonable up move in silver prices. And we briefly look at some of the underlying reasons why this may have happened. So let's take a look. Now, yesterday we published a video entitled Gold and Silver Prices Fall Ahead of FOMC Announcement, where we saw the dollar index rise quite strongly and was up at 90.61, and gold prices had fallen to $18.43 and silver to $25.10. Well, all of that has changed today, at least for silver. Now, at the time of writing, which is 19:15 GMT, the dollar stands at 90.44, so down a little compared with yesterday's video. Gold is still at $1,843, but actually shot up to as high as $1,864 a couple hours ago. But silver has successfully breached the $26 level and stands at $26.19, but has been as high as $26.97, not quite reaching that psychological $27 mark. But it has also today been as low as $24.88, so it had fallen below $25 and very nearly touched $27. So a $2 spread over the course of the day. Now, markets are still open, including equity markets in the United States, which broadly are up somewhere between 1.5% and 2%. So what actually happened today to see this upsurge in silver and a rise in equities? Well, we'll take a look at this before we talk more about what the Fed declared yesterday. So, about 40 minutes ago, Reuters came out with the headline, quote, COVID-19 savages US economy 2020 performance worst in 74 years. This is what they've quoted. The US economy contracted at its deepest pace since World War II in 2020 as the COVID-19 pandemic depressed consumer spending and business investment, pushing millions of Americans out of work and into poverty. Gross domestic product decreased 3.5% in 2020, the biggest drop since 1946. That followed 2.2% growth in 2019 and was the first annual decline in GDP since the 2007-9 Great Recession. Nearly every sector, with the exception of government and the housing market, contracted last year. Consumer spending, which accounts for more than two-thirds of the economy, plunged 3.9%, the worst performance since 1932. The economy tumbled into recession last February. Delays by the government to offer another rescue package and renewed business disruptions caused by the virus restricted GDP growth to a 4% annualized rate in the fourth quarter. The big step back from an historic 33.4% growth pace in the third quarter left GDP 2.5% below its level at the end of 2019. Unquote. We saw yesterday that the durable goods ordered for December were lower than November's figures, which were 1.2%, and lower than expectations of 0.8%. The figures were a paltry 0.2%. That said, though, the weekly jobless claims figures were better than expected or anticipated, not by a huge amount, but slightly better. And we suspect there may be some more turmoil tomorrow as we await personal income, consumer spending, core inflation, and the consumer sentiment index figures, all to be announced tomorrow. So let's go back to the FOMC because we can see what has caused some turmoil today with those GDP figures coming out? Well, as anticipated, the FOMC left the main Fed funds rate unchanged at 0% to 0.25%. Federal Reserve Chair Jerome Powell made clear the US Central Bank was nowhere near exiting massive support for the economy during the ongoing coronavirus pandemic, and he flagged a moderating US recovery. Now, we've no doubt that he had foresight of the figures that were being announced today, and therefore explains to some degree what he went on to say. You see, the central bank's policy-making body repeated it would maintain its bond-buying program at the current pace of $120 billion of purchases per month until, quote, substantial further progress, unquote, towards its employment and inflation goals has been made. It's made no changes to the composition of purchases. And if you listen to our video yesterday that we've placed a link to, you will see how that composition was made up. Now, Powell told a press conference yesterday, following the FOMC meeting, that it would take some time to achieve the threshold for altering asset purchases, making clear the central bank was nowhere near close to dialing them back. Quote, the whole focus on exit is premature, unquote, he said, noting, of course, that the US was a long way from a full recovery, and the Fed would take care to communicate clearly to make sure no one was taken by surprise of what he promised would be a gradual taper of purchases when the time comes. Quote, the pace of the recovery in economic activity and employment has moderated in recent months, with weakness concentrated in the sectors most adversely affected by the pandemic, unquote, the FOMC said in its statement. So the bottom line is that the Federal Reserve left its benchmark overnight interest rate near to zero and unchanged, and has basically pledged to continue pumping money into the economy through bond purchases. Economists are expecting growth to slow to below a 2% rate in the first quarter of this year, before regaining speed by the summer as the additional stimulus kicks in and more Americans get vaccinated. Of course, the Biden presidency is experiencing trouble in getting their additional stimulus package through, and it'll be interesting to see what those figures actually end up being. Now, we can expect to see some further oscillations in gold and silver prices, particularly silver at the moment, with a number of analysts predicting potentially a rise to $28 very soon. Now, we doubt that that's likely to happen tomorrow, but the rise today is indeed quite heartening, though, frankly, we suspect there will be further toing and froing, certainly before the end of the week, and quite possibly into the early part of next week. Of course, we shall provide our analysis on Saturday as to where we think next week will actually go. Now, what do you think? Do you believe we're now on the trajectory to higher silver prices? Or will there be a further falling back to the level that it stood yesterday, if not lower? Do share your thoughts. And meanwhile, thank you so much for listening. And if you haven't already done so, do subscribe to the channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.